Hello everyone, I'm Dr. Stock, and in this video we're talking about Tesla because they have their vehicle deliveries coming up on Sunday right around noon, and that's important to us. However, there's some other news that we have to pay attention to that comes out even earlier, and we got to keep our eyes on the prize for that one because that could be something that is either a very big help or a hindrance to Tesla. And honestly, I gotta say, I think between the deliveries and the uncertainty there, and the one other factor of uncertainty, I think that that's really going to make or break Tesla stock in the near future from where we sit right now. That could be a huge impact on demand. So we're going to talk about those two catalysts for Tesla in this video. I do want to show you some other opportunities like this one right here by finding the link for Moomoo down in the description. You can click that link, sign up using the link in my channel. You're going to get up to 17 free stocks. You do so by opening an account and then depositing $100 or more to get 7 free stocks. That's 2 AI draws plus 5 other stocks valued up to $2,000. And $1,000 or more gets you 17 free stocks, still the 2 AI draws, and then those 15 other stocks still valued up to $2,000. This offer does expire on Friday, so that's less than 2 days' time to take advantage of this. So click sign up, thank yourself, and thank you for supporting me and my family through that use of the link for my channel. Also, another way you can support this channel is through the use of Patreon. You can also find that link down in the description. Click sign up, get access to my Patreon exclusives, and also access to my private Discord where you can be one of my community members who interacts with me and my other community members over there. All right, that's enough of that. I'm Dr. Stock, Doctor of Education. Let's get right into the content. All right, I want to start with Tesla's price action that we have here. You can see the downtrend that they've been on. You can see the bottom that we were at. Let me bring the crosshairs up here for us, and this would be January the 6th that Tesla really started turning things around. We had Cathie Wood come out and give her mega bullish price prediction. We also had George Soros taking a huge stake in Tesla, disclosing what his stake from Q4 from December. And that was also another pump for Tesla stock. And then recently it sold off, came down to its 50-day, and it's been riding along it ever since. More recently, sort of just trading sideways, just this little consolidation that you have. And you can see the tapering of volume over time. Now, for Tesla, I had mentioned that there's two catalysts, one of which is delivery. So right now, Wall Street's putting in 420,000 deliveries to be expected for Q1 2023. So for the United States, that's coming in at around 180,000. For China, that's expected to come in around 135-ish thousand. And then for the EU, that's coming in around 50 to 75,000. We're going to have to watch that number come in. And then there's the rest of the world deliveries making up the difference in there. I do think that there is a lot of reason to believe that we could see those delivery numbers come in very, very strong. And so that's one reason why I'm very bullish about breaking to the upside from this area of consolidation that we find ourselves in the charts for Tesla. Now, there is another thing that I need to share with you concerning that. So let me switch back over to my web browser here. And right here, let me go back up to the title, U.S. battery sourcing guidance to cut some EV tax credits. And right here, cut some EV tax credits. And well, this is a video about Tesla. And so you can imagine who could possibly be on the chopping block for losing those EV tax credits. Well, that happens to be Tesla. And it's about where they're sourcing their materials from. Now, they were eligible for the $7,500 tax credit for the Model 3s, Model Ys, and that was a huge help in Q1. We're going to see that in the deliveries. Lots of demand coming through in the US for that tax credit. And I'm sure there's a Tesla trying to pump out as many deliveries as possible. People rushing to make those sales as quickly as possible because any Tesla using the lithium iron phosphate batteries that come from China, those are the EVs that may no longer be eligible as of the closing of March. So as of March 31st, all the old guidelines would be done. New guidelines should come into place as of April 1st, as long as the IRS and the US Treasury get their act together and by Friday put out that guidance that's expected for the EV tax credits. If they miss that date, then, well, they kick the can down the road and the tax credits continue. And if that happens, if Tesla is still able to take advantage of the $7,500 tax credit, that could really, really help out further throughout 2023. So let's scroll down a little bit here, and you can see that they say due out by Friday. Result in fewer vehicles getting full or partial credits. I believe that it's possible that all $7,500 are off the table for Tesla for any Model 3s or Model Ys that use lithium iron phosphate. And I think for the US, that's pretty much all of them right now. The long ranges that they do put out will use the 4680 batteries. Now, over here is from this is from the Treasury Department that we have, and you can see the critical mineral requirement, and it talks about being extracted or processed in the United States, and the fact that lithium iron phosphates come out of CATL from China are going to be something that rules out the lithium iron phosphate battery for Tesla, which means no more tax credit. And even if you go to their website, they do report on here this $7,500 credit is in effect for deliveries taken before an update to the federal guidance, which Treasury and the IRS intend to issue no later than March 31st, 2023. Now it says intend to issue. We're supposed to get that by Friday. So we definitely want to be on the lookout for that to happen. So if that guidance fails to come through, it's possible that it's highly likely, in my opinion, that the $7,500 continues for the next quarter until the Treasury and the IRS can get their act together and get that out. Now, if they do put that tax credit out there, then Tesla certainly has a lot of work cut out for them. Hopefully that guidance changes to allow Tesla being as though it's the #1 EV brand in the US. So hopefully more people get better deals than that. Demand continues for China, especially with that tax credit. That's certainly going to help out, especially in a weaker economic environment that we could find ourselves in. So I do want to go back to the chart here. And when we're looking at this chart and we see this sort of sideways trading, you can see it better when I zoom out a little bit. Well, maybe that's too small for your screen. Maybe you can see it from there. So we've been narrowing on this thing. And maybe let me just bring a little bit of shape into this by zooming out. And right here, you can see some of the lines that I drew in, and I put this out available on my Patreon so that people could see this a little bit earlier. So a little bit of exclusive access. That link for the Patreon is down in the description. You can see the narrowing from this top trend line, from this bottom trend line, and the fact that we're squeezing down, we're consolidating into this small narrow range. This is going to break somewhere. This is going to break sometime. And what direction could most definitely depend on that guidance, and can most definitely depend on those deliveries that we get. So setting yourself up for whatever it is that you choose to do, if you choose to do anything at all. Remember, none of this constitutes financial advice. Whatever it is, this is something you absolutely want to know before that time comes around. So what I've done is I've identified some areas of support and resistance. So up here, breaking above this top line in this wedge that we find ourselves in, takes us up to about $200 per share. I think that's pretty heavy resistance for us. However, let's assume that we get Fed tax credit approval, that Tesla makes it for the Model 3 and Model Y for at least the next quarter, preferably for the full year 2023 and moving forward from there. We're going to have to see that guidance when it comes out. I think we easily break up above the $200 level for Monday, possibly before then. Now, I do think that deliveries also need to be paired with it. I think that's also going to be significant upward pressure, and I think that gives us room well back over the $200 level up to like that $212 to $215 range. So that's if we get that good news. If we get bad news from that, like if we find out that the Model 3 and Model Y using the lithium iron phosphate batteries will no longer be covered, that could be something that either drops us back down to this area of support, down to about 184, 185, which is about where our 50-day simple moving average is as well. And then if we get really bad news, maybe we miss on deliveries significantly, and which I don't expect. And then we also find out, and maybe we could even argue that right here is support as well, up at about the 175, and then down to about 165. As a matter of fact, let me put in that horizontal line. I think it needs to be there. There we go. I swear I'm going to check my other video. I'm pretty sure I had it in there already. There we go. There's our horizontal line. So about 185, down to 175, down to 165. Those are the areas of support that we could find ourselves in, depending on the sort of news that we get. If there's going to be no coverage, no credit whatsoever, half the credit at $3,750, or if we're going to get the full credit at $7,500. We're going to have to find out as that news comes out. So as far as the guidance goes, I think they would be wise to include Tesla in it and change the guidance that Tesla could be part of it as much as possible. I don't know if Tesla has that sort of clout in order to make that happen, at least not with the federal government. We're going to have to wait and see what they say. As far as deliveries go, I still think that we're going to beat the 420,000 vehicles that we have for consensus for Wall Street. All right, so let me wrap this thing up. Tesla, as far as deliveries go, bullish. I think that it is possible that we beat guidance on that number. I think Tesla's doing absolutely everything they can to slide under the wire, to put as much of a dent into that 1.8 million vehicles that they're guiding for deliveries for 2023. Honestly, I think Elon wanting to impress on those numbers, getting up to that 2 million mark that he knows that Tesla's capable of. Although he says there's always seems to be some kind of issue that comes up. And so reaching at sort of that theoretical maximum never really seems to happen. So breaking well above that 420,000 vehicles makes it easier, takes pressure off the next 3 quarters, making those same production goals. Something that would help them, of course, in the US are those continuing EV tax credits, especially if we find ourselves in an economically contracting environment, possibly into a recessionary environment. These are things that could most definitely cut into their deliveries, their demand, and it could be something that also cuts into their margins if they have to continue to cut prices further from where they're at. So in the short term, I think that we could be seeing a big move for Tesla either way. If tax credits and deliveries go the way that are both move in positive directions, I think that we go back easily past the $200 mark for Tesla in the very near future. If we get it split, that tax credits go, but deliveries are good, I think the hit that they take from losing the tax credit, if it's an entire loss, is going to be more downward pressure than upward pressure, because I don't think we'll get that strong of a beat on deliveries where it's going to balance it out. I think that that pinch on demand that from losing the tax credit would be very, very significant. Last final thought, Tesla, I think that they're a champion and that they still have a lot of pricing power with their brand, and they also have significant margin to cushion further price cuts if they have to remain competitive. And they have lots of brand recognition that they're an innovative company and that they have more going for them than just EVs. And we'll see as their earnings come out around the end of April how they've been able to grow since Q4 2022. I think this is a really important earnings call for them coming up, especially seeing how their guidance are affected for the rest of 2023, especially in light of the deliveries from Q1 and whatever guidance we get from the US Treasury and the IRS. So thank you guys for watching this. If you want to hear more of my commentary, please click that link for the Patreon in the description. Sign up, get access to my Patreon exclusive content, and be a member of my community. Interact with me and the other community members that are over there in my private Discord. Also, do not forget about your free stocks available through Moomoo by clicking my link down in the description, signing up, depositing your cash, getting your free stocks. You're supporting yourself and you're supporting me and my family and the things that I do here at this channel. And thank you for all that you do, for your support. If it's watching this video the whole way through, saying hello down in the comments, asking your questions down in the comments, signing up for the Patreon, signing up and getting your free stocks from Moomoo, also hitting the like button, absolutely wonderful, subscribe button, ring that notification bell to see anytime that my videos come out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.